Do 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 do. Da 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 da. Do 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 do. All right, good evening, everybody. Welcome back to Walks on Wall Street. It is Sunday, April 16th, 2023. It's about 8:42 p.m. and we are live here from Central Park, 59th Street, Columbus Circle. We are back in the place to be in New York. I do apologize, okay, for being tardy. It's been a long time. It's been like, 7 days? Maybe a little over a week? Anyway. So, guys, I got caught. I was actually supposed to fly back to New York about 3 days ago. Obviously, there was a 1 in 5,000 year rain event that hit southern Florida. It was crazy. I was out in it. I've never really seen rain come down like that in my entire life. But the next day, everything was dry, at least where I was, in Miami, Florida. Fort Lauderdale, I think some parts of Fort Lauderdale are still maybe a little bit flooded. I was supposed to fly out of Fort Lauderdale Airport. Obviously, my flight was canceled due to the airport being closed. So I was able to just get a flight out of Miami the next day. I don't even know how I did it. I was on hold with JetBlue for probably literally over 2 hours. And I was able to get a seat on the first flight out of Miami the day after. So thank God for that, because all of the other flights were like $1,700. Because obviously everybody had the same idea, right? If the airport is closed at Fort Lauderdale, no problem, I'll just go to Miami. Well, the problem is they jacked the prices up. Anyway, we missed a lot of stuff, guys, last week. We missed a lot, okay? The Institute for Supply Management put out their PMI numbers, which we'll talk about. Now, if you look at the PMI numbers, let me see if I actually have access to them right now. I didn't have enough time to program it into the Nightbot. But I do have a couple of concerns with the manufacturing report. I'll put it in the chat really quickly, but you know, the manufacturing PMI did come in at 46.3. New orders and production were contracting, backlogs were contracting, supplier deliveries were faster. However, raw material inventories were contracting and customers' inventories were too low. As we know, we like to be forward-looking, right? We can use a lot of these reports as leading economic indicators. So if you see new orders contracting, what does that say as a forward-looking indicator? Well, we'll talk about that tonight. If you look in the chat, okay, if you see my name highlighted, Walks on Wall Street, I did just drop the link to the ISM PMI number. In addition, we got the CPI number, right? We got the inflation data out. Now, views were mixed on this. If you read the Wall Street Journal, Bloomberg, Barron's, or whatnot, if you watch CNBC, the vast majority of the pundits on television were actually talking about how inflation is coming down. You know, this is a better than expected report, and we should be optimistic for it. Now, even though I agree, right, on the face value of those numbers, I did see some concerns in the CPI report. I did see some of those concerns, and I voiced those concerns on my Twitter page. If you're not following me on Twitter, you could follow @WalksWallStreet. But I always say this, guys, There's two main categories that I think impact the average American the most. And in my view, that is shelter costs and that is food. You know, if you look at the hierarchy of needs to survive, right, the bare minimum, you need a place to stay, you need a roof over your head, and you need to eat. And those two particular categories were still pretty sore spots, right? The vast majority. You know, now that I'm near my computer, let me see if I can pull up the CPI report just so I could put it in the chat, so as we're talking about this, you guys can have a point of reference, if you will. So I'll go ahead and drop that in the chat again, the CPI report, and take a look through it, right? Look through the, I think it's called Table A, if you scroll down about a quarter of the way down the page, and you'll see the sore spots, as I like to call them, right? So food inflation was a sore spot. Shelter costs was a very big sore spot. And the bright spots, which means categories in which prices were actually coming down, were things like new vehicles, things like new used vehicles and energy, which is good news, but we'll also talk about some caveats there. And last but not least, everybody, we are now officially into earnings season yet again. Okay, so last week to kick off earnings season, we had the Wall Street mega banks. Continuing into this week, we are going to have even more major banks report earnings, and also some broker dealers. I think Charles Schwab will be reporting tomorrow on Monday, so the 17th. We'll talk about Charles Schwab too. We have M&T Bank, and I think Goldman Sachs, BNY Mellon, and Bank of America will also report on Tuesday. And then we'll talk about the National Association of Realtors. So without further ado, everybody, let me go ahead and put my laptop away, and we will get started on our stream. I'll say hello to everybody in the chat. I see Brian, Dr. Longas, Zach Drew, Transit in Montreal is here. Good to see you. The Garlic, welcome. Kenneth is here. Sunshine After Rain, Shatoya Davis, Dominic. Good to see you, Dominic. Dante Rose, British Gray, Who Dat Dave, War Walker, Clarence Jackson. Good to see you, Clarence. GG NYC. Meep is here, welcome. Justin S. and Paul. Good to see everybody. Now, I don't have my backpack today, so it's going to be a little bit cumbersome walking around. I only have my briefcase. Now, would I consider myself a briefcase kind of guy? Maybe. I think I would. I think I like walking around with the briefcase a little bit better. My back has been a little bit taxed from walking around with the backpack so much. So we'll see how we can manage. I see FredX is in the chat. What's up, FredX? Hopefully you had a great weekend so far. Hopefully everybody had a great one. Hopefully it was dry, unlike the majority of the time I was in Florida. Real quick, this is 59th Street, Columbus Circle. I'll give you guys a quick glimpse of New York City's Billionaires Row. We are overlooking 220 Central Park South and Central Park Tower. Be the Traveler, says Tom, you had asked us to remind you of the Park Avenue tulips. You know, I think we're going to head over that way tonight. Right in front of us is the Deutsche Bank Tower. But to your point, my friend, I think we're going to walk across Central Park South. Maybe we'll go to 57th Street. Central Park South may be a little bit too busy for us tonight. And then we will walk over to Park Avenue, where we'll be able to see the beautiful tulips. Now, for those of you who don't know, every single spring going into the summer season, on pretty much every intersection, right, every major intersection on Park Avenue, they plant, I mean, it must be hundreds. This is hello, what a night, good to be here. Thank you so much, The Investigator, appreciate you. Now, everybody, we are going to be doing the Markets to Look Ahead stream, okay? It is going to be a very busy week upcoming on Wall Street. But I also want to take some time to talk about the Federal Reserve. And before that, I want to give everybody a brief recommendation. Has anybody, or did anybody, I should say, read the cover story of Investors Business Daily this week? If you haven't, I would really, really highly advise you go to investors.com or go to your local newsstand if you live in New York or any major city, or you go to the grocery store, wherever they sell the paper. And I think this is a must read. I think this is such a critical article for everybody to read. And I don't want to give the whole thing away, but it was essentially a very good breakdown. Okay, a very good breakdown on the, I guess you could consider it a war, right? I would consider it more of a race competition between the United States and China as it relates to the tech race, right? You think about semiconductors, you think about EVs, you think about cloud computing. And one of the key points in the article, which I really enjoyed reading about, was the explanation that many people, right, including some of the most prominent analysts on the street, but mainly just the general public, what we really don't realize and understand about China is that the vast majority of the rare earths that go into making all of these precious semiconductors, that go into making the batteries for these EVs, pretty much come out of China. So the United States needs to be very careful here on how they go about pushing China's buttons. And I've said this before, so again, if you read the cover story of Investors Business Daily this week, there's a really great breakdown. The United States and China have a very interesting relationship. And it's almost as if the two nations do not get along, the ripple effects and the ramifications could be massive to the entire rest of the world. Because I would say the majority of the innovation, right, the cutting edge innovation in semiconductor manufacturing, in semiconductor design, comes out of the Western world, right, in places like the United States and Taiwan. But a lot of the raw materials that we use into making these products come out of mainland China. So it doesn't necessarily matter all that much if the United States is the leader, right, which I still think we are, by the way, in semiconductor design, manufacturing. If we don't have the raw materials to make these products and services, well, guess what? We don't have the products and services. So I think it's going to be very important as we walk down 57th Street. You can see 432 Park Avenue in the distance. I think it's going to be very critical for the Biden administration and the administration after the Biden administration, assuming he doesn't get reelected. If he gets elected, it will continue to be the Biden administration. It's going to be very critical for them to walk a fine line with China, to have a working relationship, as I should say, to have a working relationship with them. I don't know, anybody have any thoughts about that? Because the more I look into it and the more I read about it and study it, there's all of this hyperbole being thrown out in the media. Real quick, this is the Brooklyn Diner. Gorgeous night out in New York. You know, there's all of this hyperbole being thrown around as it relates to, you know, the United States is going to go to war with China, China is going to declare war on the United States. But if you really understand innovation and all of the new emerging products and services that are coming about, it's almost, if you want to be a rational person, right, having rational thought, it's almost kind of impossible for the United States and China not to have a cordial working relationship with each other. Because if that relationship breaks down, then nobody has any products and services, okay? There's going to be, I mean, I guess you can call it Armageddon. It's just the world won't physically work. And the more I think about it, the last thing I'll say about it, and then we'll move on to the live stream, is this is almost a blessing in disguise, I think. Because, hear me out, think about this. If the United States didn't need China, and China didn't need the United States, I think that would open up the possibility of a real hot war with China. So even though we may not agree in terms of governance, in terms of government, and the way we operate and run our countries, right? With China being operated by the CCP, the United States being a democratic republic, our common vested interests to have our, society here in the United States and over there in China be at the forefront of innovation almost forces us to be civil with one another and not enter into these, what you call, well, I should say what the media is throwing around, these hot conflicts or hot wars. I don't know, any thoughts there? Agreements, disagreements? You guys tend to know about this stuff a little bit better than me. Anyway, so we're on the corner of 57th Street, everybody, and 7th Avenue. You are now looking right at the beautiful Carnegie Hall. Hey, Sabrina Fair, what's up? Good to see you. Who Dat Daves is totally agreed, Tom, interdependent. Yeah, I mean, I think that's probably a better way to put it, Who Dat Dave. We depend on each other, right? And it's sort of, to me, it's like a blessing in disguise. And I was having a conversation over the weekend with my friend about this, who actually runs a fund specializing in Chinese equities. And he's like, it's almost like a blessing in disguise, right? It's almost like a blessing. Hey, SME Media, good to see you. Welcome. Let me just try to catch up on some of the chats here. I see Philip is here. This is good evening, Tom. What's up, Philip? Zozo Bob says China is bipolar between its politics and its business side. We are their largest customer. Agreed. Zozo Bob, you bring up a good point. And I also wanted to briefly mention one more thing. I think this is actually good to sort of touch on this topic of China. Because China, whether we like it or not, they're an economic powerhouse and they're a superpower. I think we could all agree, right? We could have disagreements in terms of, maybe ethics things and stuff like that. We can, go back and forth. But to say they're not an economic and an innovation powerhouse, I think that would just be a little bit disingenuous. So, man, there's so much to talk about. We've been MIA for about a week. So I'll say this. Did anybody see the news regarding France? Anybody see that? Where essentially France is inferring that they want the US dollar not to, fall by the wayside and decline, but to have less of a impact in terms of global trade and the US dollar or the greenback being the world reserve currency. Now, I do have a take on this, and I have a theory as to why France is saying this. But real quick, this is 157, just for those of you who are new to the stream. This is the building that kicked off the trend on New York City's Billionaires Row right here. So you have the Park Hyatt Hotel and the residences in one tower. So, yeah, Jay Sully's like, he's an idiot. So I have an interesting supposition about this, and I'm really curious to what you guys think. And I want to summarize it like this. Does anybody remember, okay, as we talk about the sectors in the market that are outperforming, okay, and we've been hammering on this, okay, over the past couple weeks. And I've been saying that luxury is doing fantastic. Luxury is absolutely on a tear, doing really, really good. What is a major French company that is now a global powerhouse and one of the richest companies and one of the most valuable companies in the world? Yeah, you're right. It's LVMH, right? So LVMH Moet Hennessy is a huge luxury brand. And as we walk down 57th Street here, we're actually going to come up to 5th Avenue, where we'll see the big Louis Vuitton building. And there's no wonder why those big luxury brands like LVMH, Moet Hennessy is doing really well. Also Hermès, which I also think is another French brand. Does anybody want to take a guess, and I think it's kind of obvious, why luxury is continuing to be so ridiculously strong going through 2023, and if I had to bet, I think it's going to continue into 2024. It's a very key reason, in my view, and the reason why I say this is one of my good friends, who is an analyst, at one of the major banks sent me this research report about China specifically. And what major event in China just happened in the recent history that is driving economic growth? If you said in the chat, and I'm going to try to read as many comments as possible, this is the Steinway Tower. We'll just do a quick Billionaires Row tour as we're talking about this. You would be right if you said China has now stopped their zero COVID policy. So before, President Xi and the CCP were so adamant about having a zero COVID policy that China was actually lagging the United States and the rest of the Western world in terms of economic productivity, in terms of consumer sentiment and consumer spending. Now, China is fully open for business. And if you look at the breakdown, and I want to paraphrase what it said in this research report. I'm actually going to try to see if my friend will allow me to share it with all of you guys. But I think about 13%, and don't quote me on this, I think it's about 13% of all of the revenue at LVMH comes from China. So you're having a lot of these wealthy Chinese consumers that have been pent up throughout the entire pandemic, finally able to travel abroad, finally able to shop, finally able to spend now that the zero COVID policy is terminated. So the way I think this relates to France coming out and sort of cozying up to China is because their economy is very, very dependent on Chinese internationals or Chinese nationals coming to France and spending money. And, even spending money at the major French brands abroad and everywhere else, right? So I think by that nature, since France doesn't have as well as a diversified economy as the United States, France needs to do what's appropriate and right for them. And they can't be so aggressive on criticizing China. They can't be so aggressive on, I should say, just more broadly criticizing the CCP. They need to sort of play the fence here, especially during a time where China is off the zero COVID policy. And China is a huge driver of France's economy as it relates to spending. Any thoughts on that? I was just thinking about this weekend. And I don't know, I thought it was interesting. Hey, Clara W says, yes, the Chinese love their name brand stuff in terms of spending. I think there's probably some direct resources that we could look up, or maybe if somebody wants to drop it in the chat, about the percentage of sales that come out of the Chinese consumer potentially. All right, let's read some more chats. Weirder says, China to me is a huge dumping corporation. Maybe. Michael Joseph says, geopolitics is shifting in ways we haven't even seen in decades. China, Russia, Brazil partnership with France sliding the United States. Yeah, I think you're talking about the, I think to Michael Joseph's point, it's never a good look when you have another world superpower sort of leading the way in terms of peace talks and negotiations, right? It really should come from the United States. We should set the precedent to that. So I think on a global stage, if you have China, at least open to the idea and leading peace talks in Ukraine and Russia, but Zelensky did come out and said it's probably not going to lead to anything. But just by the fact that China is able to sort of be a leader in that discussion for peace talks is significant. The same thing with Saudi Arabia and Iran. So I think you have a good point. All right, let me give you guys one last shot of Billionaires Row, and then we'll head out here. Hey, Big Task at Hand says, what do you think about Brazil not using USA currency for trading? I don't know if that's true. That's what I would say. I don't know if that's true, that Brazil's not going to use the United States currency for trading. Eric says France wouldn't even think of this if we had a strong America, but sadly we no longer do. I see your point a little bit, but also, I mean, if you look at the numbers, right, I really wish I programmed this into the Nightbot. But again, France, LVMH is now a massive, massive global powerhouse, right? I think if you look at the top 10 most valuable companies in the world, and maybe some of you guys could Google this while we're doing the stream so all the other viewers can, read alongside of us. But I think out of the top 10 global most valuable companies, all of them are American companies except Saudi Aramco and now LVMH, right? So that's huge. So I think France sort of needs to play ball if they want to, look out for their own self-interest. And I don't see necessarily anything wrong with that. I understand why they're doing it. But speaking of LVMH, here we have the Louis Vuitton building right here on 5th Avenue and 57th Street. Hey, photos from around New York. People have really been spending a lot more on luxury goods and items. I definitely would agree with you. Photos from around New York, LVMH coming off another gangbusters quarter. The stock is trading near all-time record highs. Now, to photos from around New York's point, for a brief time, the CEO of LVMH was the richest man on earth, dethroning Elon Musk for a brief period of time. Hey, Tariq says, I applaud Walmart closing in Chicago, Portland, and other cities. Yeah, so Tariq, I saw the same thing. Now, Tariq, quick question for you, because I haven't really been able to stay on top of this. Every single earnings season, which we are now in the very beginning stages, right? Anytime we talk about earnings season, it always starts off with the major banks, right? The financials. So last week, to kick off earnings season, we had JP Morgan Chase reporting earnings. And then this week, we are going to hear from pretty much all of the rest of the Wall Street mega banks, like Goldman Sachs, BNY Mellon, Bank of America, and the like. But as we move through earnings season, we always sort of talk about the major retailers, right? The big box stores, the big chains like the Walmarts, like the Targets, like the Costcos, and even some of the drugstores, right? And to Tariq's point, right, as he mentioned in the chat, that a lot of these organizations are making the very hard decision to shutter a lot of their stores in select cities and states that have had a very, very big problem with retail theft. Now, I'm not sure, I don't know if that is the reason why Walmart is choosing to shutter those stores in places like Portland and the like, but if I had to guess, and I don't really want to assume here, I'll quickly show you guys the Apple Store. I think that's probably part of the reason. Because on every single earnings report, right, remember we were covering Target, ticker symbol TGT, in depth. Target was having a very big problem with retail slippage as well. Who else? Rite Aid, we were actually on that earnings call. Rite Aid was having a major problem with retail theft, so much so that they had to close a lot of their stores in New York City because it just wasn't profitable. So here we have 58th Street and the beautiful Plaza Hotel. My friend Clarence Jackson says Rite Aid and CVS are closing due to theft as well. Yeah, Clarence, I know for sure that Rite Aid, the CEO of Rite Aid, came on the call, I think this was a couple quarters ago, specifically saying that, you know, they have to close their stores due to so much theft. So we'll see. Sabrina Fair says, Tom, shrinkage hits the bottom line. Indeed it does. Joan K is here. What's up? Good to see you. Hey, Dr. Longus, it's amazing how Chicago is on such a decline, much like San Francisco and Portland. people and businesses fleeing as fast as they can. Yeah, and it's also kind of sad, right? Now, even though I'm a New Yorker and I want to see New York do well in compared to other cities, right, or in comparison to other cities, it's still really sort of disheartening in a way to see a lot of these amazing cities in the United States start to deteriorate. And I don't really want to get too political here, but I think Democrats and Republicans alike can agree that specific parts of major cities are not what they used to be. Now, I think places like San Francisco is a lot worse than, let's say, in New York. I actually, from being here so long, with this new mayor, I do have to give some credit. I'm actually seeing changes for the better already. Right now, there's a lot of people out here who just always love to throw stones and be a critic. But look, here's my take on it, and I won't go too deep into it, but here's my take. The new mayor, right, for those of you who don't know, is Mayor Eric Adams. Would I vote for the guy? No. But that's who we have. And I think if you're a New Yorker, right, when you have a new mayor, this is the flagship Apple store. For the first year or two, you should really just give him your blind support. And I know that may sound a little bit cringy, and I know you guys are cringing. But if you don't, nothing is going to get done. You got to give everybody at least a shot to try to do something. So whenever I see positive changes, here's another luxury brand store, Dior, that's doing fantastic. When you see positive changes, I think it's appropriate to call it out. So one of which we've actually seen live on the stream here as we overlook the beautiful Plaza Hotel. And I'd like to detail that positive change for you guys. And I think you guys already saw it a couple live streams back. If anybody's familiar with Washington Square Park, okay, this is a park very famous, not as famous as Central Park, which is right here, but one of my favorite parks in the entire city, okay? Washington Square Park. It is a staple and it is an icon in New York City that sits right in the neighborhood of NYU, New York University. Now, for a long, long time, the northwest side of the park has just almost gotten to the point where you just can't even go there, right? It's filled with homelessness, with drug abuse, derelicts, thieves, like really, really bad environment. It's so filthy. It's almost like an encampment. But I think it was about maybe a month ago, and we're going to head over to Park Avenue now. I'll show you guys the amazing tulips here. This is 432 Park Avenue, by the way. The last time we went to Washington Square Park, the change was so drastic that I was almost speechless. And I'm talking about a change for the better. The park was so clean. They cleaned up all the litter. They cleaned up all the garbage, all the graffiti that was written on the ground, totally cleaned up. And that's a significant change. And now many of you may be thinking, oh, well, it's just one park. But you don't understand. A lot of families live around that park. And, to take your kids out for a walk in the park and see all the drug paraphernalia all over, it's not a good look. So even especially tourists, they come and see that. It's kind of embarrassing as a nation and even as a city. And they cleaned up Washington Square Park. I mean, the northwest side of the park now is totally usable and totally livable again. So, I think the mayor is trying, right? Would I vote for him? Do his politics align with mine 100%? No, they don't. But I'm actually seeing positive change, right? I'm seeing them make an effort to clean things up. I'm seeing them make an effort to put more police presence in the subways so people feel comfortable taking it. So, we'll give them some more time. But look, I'm optimistic about it. So I'm going to play ball, and I'll call the good things out when I see it. Hey, Tyler Silva's here. Says, hey guys, happy Sunday. Good to see you, Tyler. Tony S. says, someone please fix Chicago as well. I know. Yeah, New York's not like Chicago, my friend. But hey, Ryan Beck, what's up? Ryan, we were just talking about. We had a brief conversation about. We were talking about China a lot tonight. And the reason we were doing that is because there was an amazing cover story this week in Investors Business Daily. So if you have IBD, if you receive the paper, I think that is the first thing that you guys should do at the start of this week. You got to read that cover story. It is so critical, and it sort of talks about that relationship as it relates to the big tech race in semiconductor production and manufacturing, as well as some of the critical softwares to design these chips. And it also talks about a lot of the actions that the French government took over the past 2 weeks to sort of start to play ball with China. So we sort of had that conversation. But guys, it is Sunday. So we are going to dive right into this and go day by day. Oh, look at this. This is an interesting sculpture here. Hey, Steph UH, what's up? Chris Beeman from Arizona. Good to see you, Chris. This is another very luxury upscale brand. So we're going to go day by day and talk about all the major events happening throughout this week on Wall Street. So to quickly preface this, we are now in the thick of earnings season yet again, my friends. Okay, so earnings season kicked off last week. JP Morgan Chase reported a fantastic quarter. Jamie Dimon and the crew really blew it out of the water, knocked it out of the park. And we are going to see a lot of the financials continue to report next week. Now, what I say next may surprise you. Okay, what I say next may surprise all of you guys. The company that I'm looking forward to the most in terms of their quarterly earnings report next week is actually Charles Schwab. Now, I know what you're thinking, but you're like, wait, Tom, Bank of America reporting next week. Goldman Sachs reporting next week. BNY Mellon is reporting next week. Johnson & Johnson, Netflix. Why do you care about Charles Schwab? Well, I'm going to tell you why. I'll tell you why. I would like to direct your attention to the stock chart of Charles Schwab. So if you have your Bloomberg terminal up, if you have TradingView or MarketSmith, whatever type of charting software you use, take a look at a weekly time frame of Charles Schwab. Now, Charles Schwab, and Charles Schwab is mainly a broker-dealer, right? They do have a banking business, but that business is quite small, but they're mainly a broker-dealer. Does anybody recognize, I should say, when this whole Silicon Valley Bank debacle was going on, all of the regional banks were selling off, right? You had pretty much every single regional bank across the board, such as the one that we're about to walk past right now, sell off in drastic fashion. And there was actually a big scare on the street that many of those regional banks would actually go under or be forced to bail out. But there was one broker-dealer that had the most interesting price action in my eyes, and that was Charles Schwab. I think the stock is down almost 75%. The stock was selling off so bad that the CEO of Charles Schwab had to make a public statement on CNBC saying that everything is fine, we're going to calm the waters, there's nothing to be worried about. And the CEO actually publicly announced that he purchased his own stock. Now, many people, this is the bank I was talking about, by the way. This is First Republic Bank. That was, one of the banks that was in trouble. So the CEO of Charles Schwab comes out and buys his own stock to sort of calm the waters. The stock rallies for 2 or 3 days. But at the end of the day, in my view, even though I think that was the right thing to do by the CEO, right, when your company's in hot waters and in turmoil, you sort of have to go down with the ship, right? Unlike the CEO of Silicon Valley Bank, that when things were turning south, he actually sold his stock and dumped it on his customers and made about $3 to $4 million. You're really supposed to go down with the ship. So even though Charles Schwab's CEO purchased stock and the stock rallied, the price rallied for a couple days, maybe 2 to 3 days, we are now back below his initial purchase price, which leads me to believe that the market, for whatever reason, is not buying that everything is all good at Charles Schwab. So tomorrow, on Monday, 17th, we're going to hear from Charles Schwab as they report earnings. And if I had to make a suggestion to everybody here on the live stream, real quick, this is 432 Park Avenue. Check this out. This place is wild. I'll try to give you guys an interesting look at it. If I had to give a suggestion to all of you, it would be I would go to Charles Schwab's website, I would click on the investor relations page, and I would punch in your email address, first, last name, email address, and they will actually send you a link to their earnings webcast, right, to their earnings conference call. And I would be on there live tomorrow. I know I will. And I would really listen and pay attention to the questions that many of the analysts at many of these major Wall Street mega banks are asking the C-suite, because I can guarantee you guys that they are going to get grilled tomorrow. So I think this is going to be a very important earnings season, especially for the financials, because it's going to give us an in-depth look at just how a lot of these banks and brokers are dealing with the ramifications, and I should say the blowback, of the Silicon Valley banking collapse. Hey, Steph UH, what's up? This is, wow, guys, it's good to have Tom back. Yeah, I mean, guys, it's good to have you back too. It's been, I think it's been like 7 days. I've been going through withdrawal, like stream withdrawal, because I've been wanting to do the stream, but we had a crazy, ridiculous 1 in 5,000 year rain event hitting southern Florida. Now check this out. This is 425 Park Avenue. This is one of the newer developments in terms of commercial real estate that has gone up here in New York City on beautiful Park Avenue. And our good friend Ken Griffin from Citadel Securities has a big office here. Hey, Dutchman, this is Tom. Great seeing you again. Thank you so much, Dutchman. I appreciate it. Joseph Hardaway, appreciate you, sir. Thanks for joining. Blues Writers, the Sam Bankman fraud didn't go down with FTX. He went to the Bahamas instead. Yeah, Blues Writer, I agree with you. Oh, man, that's horrible. Blues Writer, I agree with you, but I think that, I know you're just joking around, but that's hilarious in and of itself. But yeah, Sam Bankman-Fried was just a total fraudster. I wouldn't go as far to say that the CEO of Silicon Valley Bank was a fraudster. I would just consider him weak-willed and doing the wrong thing. I think it was an ethics lapse. I think it was morally wrong, and I think it's a bad look. Think about it like this. If you're a CEO of any publicly traded company, right, you have a duty and obligation to your shareholders and your partners. Wow, look at these tulips. This is exactly what we were talking about. Look at this, guys. Now, I think the camera will better do it justice during the day, but look at this. There's probably hundreds of tulips just like this all up and down Park Avenue. Check that out. Now, I think some of them are probably multicolor. This one is only purple, but these look really nice. Look at that. But anyway, if you're a CEO of a publicly traded company, you have a moral and fiduciary duty to your partners to do the right thing. So if I was the CEO of a publicly traded company and I had $2 million worth of stock, and I knew the company was going to go bankrupt in a couple weeks due to my negligence, and I'm like, you know what, we had a good run, I'm going to go ahead and just cash out, sell my $2 million, and then let all of my shareholders go to zero. I just think that's a little unethical. In my view. Here's another shot here. Carol says, hey, Tom and friends, was your home affected by the flooding in Florida? No, it was not. It was not, but thank you for asking that, Carol. I do appreciate it. Now, I told you guys, and this is actually a pretty good segue because we're going to talk about real estate. I see my good friend NBA Elias here. Good to see you, my friend. Hope you had a great weekend. So I told you guys, I was actually looking for property. I started my search to buy property in southern Florida, I think in 2015. I think it was very early 2015. And I always knew flooding was a major problem in southern Florida. Now, the vast majority of realtors, right, and this isn't a knock against realtors. There's some realtors and real estate agents out there that are freaking killers, that are awesome, that act in your best interest, that are fantastic. But the vast majority of them that I was working with down there said, don't worry about buying in a flood zone. Don't even worry about it, because you just buy flood insurance. Now, that is horrible advice. That is almost negligent advice. That's just it's just horrible advice. No, if you're looking to buy property in Southern Florida or anywhere, you should be stalking the neighborhood, staking it out, and making sure it never floods. So what I would do when I would look for property down in Miami, I'm talking about the Miami-Dade County. Now, Fort Lauderdale is Broward County, but you get the picture. What I would do when I would visit a property, right, if I was going to look at a deal, before I would look at that deal, I would literally look at the weather report and plan my trips around times of day, or I should say days of the week, where it would be very rainy. And what I would do is I would stay in an Airbnb in that neighborhood on the specific days that it would rain a lot, because you get to see which streets flood, which streets don't flood, where the sore spots are, so to speak. And what I learned from that is, some of the best neighborhoods, the most gorgeous and most beautiful neighborhoods in Miami, such as Surfside, Sunny Isles Beach, in and around those neighborhoods, even North Beach, where I love. Even if it rains, even if we have a very hard downpouring rain, the street's just gonna be totally flooded out. Now, the next day, the water goes away, right? Because that's sort of a blessing and a curse of being in Florida in general, is that all the ground is very porous limestone. So the water comes up, but the water goes out very easily. So if you're looking to buy a property in Southern Florida, that would be my one tip. You got to do the due diligence on it, and you have to make sure, at least this is what I did. I spent a lot of money doing it too, but at the end of the day, if you're going to buy a $500,000 to $1 million investment, you got to spend a couple $1,000s doing diligence. I would stay at a hotel or Airbnb on very, very rainy days and walk the neighborhood and make a note of which neighborhoods flood and which neighborhoods do not. And that is why I came across the particular neighborhood that I bought in. It's in Flood Zone X. That's another thing you should do, by the way. You really should look at the flood maps and look for Flood Zone X specifically. So we had a 1 in 5,000 year rain event where we had 24 inches of rain. Think about that for a moment. 24 inches of rain fell in Southern Florida in 6 hours. It was the most crazy thing I've ever experienced ever. I can't even really describe how hard the rain was coming down, because it was almost so cartoonishly ridiculous that the only way I can explain it is, if you've ever watched a fire hose, like an FDNY fire hose putting out a fire, it was like standing under a fire hose for 6 hours straight. That's the only way I could describe it. I tried to post some videos on my Twitter. If you follow me at @WalksWallStreet, you can see some of those videos. This is the Ferrari, showroom here. But yeah, my neighborhood didn't flood, thank God. So yeah, moral of the story is you got to do your diligence. Don't listen to people that say, yeah, just buy any house you want, buy any property you want, just because we have flood insurance. That just doesn't even make any sense. Zozo Bob, yes. This is X zone means very rare flooding. Yeah, and who makes those maps, Zozo Bob? I believe they're those FEMA flood maps. Very good to look at. Hey, Ibrahim, what's up? This is very smart time to stay in the Airbnb to observe. Yeah, you got to do your diligence, right? You have to do your diligence, especially in those niche markets where unfortunately things flood, right? If you live anywhere in Florida, especially on the East Coast, Fort Lauderdale or Miami, you're going to have to deal with that. You're going to have to deal with flooding. So you want to mitigate your risk and your investment as much as possible. Hey, Andrew F. is here. She says, you have to see my community in Tampa, Florida. When it rains, it causes huge puddles every time. Yeah, I could imagine. Man. Now, you guys got to look at those pictures I posted on Twitter. because I was 72nd Street, I want to say 71st or 72nd Street, and the water, and I'm not joking when I say this, the water literally came all the way up to the storefronts, right? And this was just, a couple days of rain. The next day, we had that crazy day where it was a 1 in 5,000 rain event, 1 in 5,000 year rain event. And the water was literally inside the stores. Now, I wake up, I go back there the next day. It's sunny, it's 82 degrees, and everything is bone dry. It's just almost kind of surreal looking at it. It's kind of weird. All right, guys, so we are now looking at one of my favorite buildings, or I should say my favorite building of all time. In New York City, this is the Seagram Building. This is located right here on Park Avenue and East 53rd Street. We're actually going to cross the street to check it out right now. Somebody says, Tom, is flood insurance expensive? Yes. Homeowners insurance, property insurance in general is very expensive in Florida, and I think it's only going to get more expensive. Michelle Henry says, when I moved last year, I checked the place out and asked questions to make sure the place was safe and in a good neighborhood. Very good diligence. I applaud that. Additionally, especially if you're buying a single family or a multi-family property in a neighborhood, it doesn't hurt just to knock on your neighbor's door, right? When I purchased my property, I literally knocked on my neighbor's door and just said, hey, introduce myself. My name is Tom. I'm from New York. I'm thinking about moving into the neighborhood. If I purchased this property, I'd be your neighbor. Is there anything you could tell me about the neighborhood and the property? And it turns out that my neighbor actually grew up in the house I purchased, and she told me everything about it. She's like, yeah, the house, unfortunately, it's been abandoned because her father passed away. But they give you the whole rundown on the neighborhood. Is there a lot of crime? Is there a lot of street noise? Does it flood? So that's the kind of diligence you guys really need to be doing. So for sure. Andrew F. says South Tampa gets flooded really easy. So we stayed away from that area. Love that. Sabrina Ferris says, Tom, true, I did this in San Francisco. We are still keep in touch with those former neighbors as well. Yeah, there's nothing wrong with just, knocking on the door. Many people don't do it because, it's a little bit, I guess people are shy and it's a little bit embarrassing, I guess. But at the end of the day, you're about to drop $500,000. Okay, a property, for most people in the United States, this is the largest investment you're ever going to make. So you got to do the diligence and you got to negotiate hard. All right, guys, check this out. This is so exciting because it's beautiful weather. That means these two massive fountains right here at the Seagram Building are probably going to be in operation relatively soon. Usually there's, water spouting about 10, 12 feet into the sky. But check out 432 Park Avenue from the entrance to the Seagram Building. It's absolutely fantastic. Hey, I see Patrick, New York. What's up, Patrick? Thank you for being here. Touring different places, Joan K. Welcome. All right, so we got to move here right along. We're getting a little bit behind, but that's good. We have a lot to talk about. I've been MIA for a long, long time. So that's going to be the number one company that I'm very interested in hearing their quarterly earnings, is Charles Schwab. So they are going to report on Monday, the 17th, after the bell. And once again, for those of you who are just joining, the reason why I'm going to be very interested in that particular report is because Charles Schwab is one of those broker-dealers that have sold off more than the average, I should say, stock in that specific sector. So you think about Interactive Brokers and all the others. For some reason, the market is telling us that something is wrong at Charles Schwab. So much so that the CEO had to come out and buy his stock, come on CNBC and sort of calm the waters. So I think there's a lot to find out, and we'll talk about that in depth tomorrow. I think the only other thing going on tomorrow, everybody, is JB Hunt is going to report, M&T Bank, as well as State Street will also be reporting earnings. And as we continue our talk about real estate. Tomorrow we are going to hear from the National Association of Home Builders as they release its housing market index for April. Now, if you think about consensus on Wall Street, the vast majority of economists and analysts are expecting a reading of 44. That would be the exact same reading as we got in March. Now, here's why I think this is very, very critical to pay attention to this. We already talked about today luxury, right? We talked about LVMH, Moet Hennessy, how a lot of the luxury brands and even some of the luxury hotels, specifically being Hyatt, are really outperforming, right? They're trading near their 52-week highs. The stocks are really strong. You know what else is another industry group and sector that has been surprisingly very strong? It's been the home builders. Now, you would think, or let me just say I would think, okay? Because I know we some of us disagree on this particular subject. But you would think in an environment where interest rates continue to go up, okay, if you look at the average 30-year fixed rate mortgage right now, British Gray, I see you joining the chat. Good to see you. God bless. British Gray is joining us from Tampa, Florida. Always a pleasure to have you in the chat. Trust you had a good weekend. But if you look at mortgage rates, yes, they've declined a little bit, right, after the whole Silicon Valley Bank collapse, but they're on their way up again. The average 30-year fixed rate mortgage, according to CNBC, I think is about 6.8%. Could you guys actually double check me on that? Does anybody know what the average 30-year fixed rate is right now? I think it's 6.8. But still, you get the point. So why would home builders be holding up so well, right? Many of them are trading near 52-week highs. You look at Toll Brothers, you look at KB Home, pretty much any major home builder is acting relatively well, especially the ones that deal in the higher end markets, such as Toll Brothers. So Toll Brothers tends to service a very specific type of clientele, right? If you purchase a Toll Brothers home, chances are it's going to be more on the luxury side of the market. You know, let's actually cross here by the Waldorf Astoria Tower and Residences, and then we can cross and I'll show you guys these tulips here. Check these out. There's probably like 50 to 100 here. But I think it's important to pay attention to, right? So we're going to hear from the National Association of Home Builders tomorrow. We're going to get a feel on their outlook. You know, I think we're also getting building permits that are due very soon, which is also another very good leading economic indicator. But it's going to be important. So keep an eye on Toll Brothers, keep an eye on KB Home, you know, and keep an eye on the, I should say, margin compression or the potential margin compression at a lot of these home builder companies. And the reason why I say that is this. Let's just cross here. We gotta hurry it up. I gotta scurry across the way. Oh, real quick, interesting segue. Guys, this building right here is Colgate-Palmolive. For some reason, every time I try to look at crude oil futures, and I know you guys don't care about this, but just popped in my mind. Every time I try to look at crude oil futures now, my commands on my keyboard, for some reason, all got screwed up, so it doesn't revert to futures automatically. So it always pulls up Colgate-Palmolive's ticker, right? Because if you type in CL, right, which is the ticker for the crude oil futures contract, it's also the ticker for that company. So I'm like, wait, oil is trading at that? I'm like, no, it's actually not. That's another thing we need to talk about. Whoa, look at this. Guys, look at that. What are they doing to Park Avenue? Is this going to be, are they diverting the entire street here on Park Avenue? Well, this is new. So this used to be a big medium. And now it looks like they've removed the vast majority of the medium and put in an additional lane, an additional turning lane here on Park. Wow. Yeah, it used to look exactly like that. The median used to be huge. Hey, Silo's here. Yeah, now it looks like they put in an additional lane. Interesting. So anyway, not to be too much all over the place, everybody, but last week we couldn't do the live stream, and I'm so upset about it because it was so critical to do the live stream, right? But again, we had some weather events. And the reason why it was so critical is because we got the CPI report out, right? We got the CPI numbers. Now, does anybody notice the most interesting thing, in my view, about the CPI? The vast majority of people on the street and in the financial media were sort of cheering on this report. We were saying, wow, CPI is only up 5% year over year. Things are cooling. Inflation is coming down. This is great news. Now, I'm an optimist at heart. I get that. I understand how people could say that this report, CPI report, was good news. But in my eyes, if you do a deep dive, okay, into the report, as we're looking at this cause statue here, there were two critical areas that you guys already know that I focus in on. One of which is shelter costs, and the other is food. And the reason I focus in on those two categories so much is because, in my eyes, those are the two main critical categories that matter most to the average everyday American. And I think it makes up your largest expense. Now, I don't want to speak for anybody else, but I'll speak for myself. If you were to do an audit on my spending, I spend the most amount of money on shelter, right, paying my mortgage, and feeding myself food. And I would think, right, it's never good to assume, but I would think the vast majority of Americans do the same thing as well. So yes, all of the other categories, right, and this is why it's so important when these CPI reports come out, that you don't just read the CNBC, the CNN, and the Fox Business headline. You got to look at the report yourself. You have to go through the data and do the work yourself and not be lazy about it. Because if you look at the Bureau of Labor Statistics, apologies that I didn't put it into the Nightbot, but if you just type in Bureau of Labor Statistics CPI report, you'll actually get the PDF for free and you could look at it. Scroll about a quarter of the way down on the page and you'll see subsegment Table A. Now, section Table A will give you a detailed, I'm getting distracted here. Look at this. They made Park Avenue really nice. Look at how wide it looks. It looks like they're building an on-ramp into Grand Central Terminal as well. This is cool. Look at that, guys. They took out the entire medium and they made the street twice as wide. That's awesome. So anyway, if you look at the report, if you look at Table A, you'll see that the reason why the main CPI number came down so much is because energy came down a drastic amount. But what did we just talk about as it relates to crude oil? Over the last month, we've actually been getting a very big bid in the price of crude. So I think last month's reading was not necessarily a false reading in the CPI. But I think it's already an outdated reading because crude oil has been going on a tear. I think we're over, $85? Could anybody in the chat just quickly post what we're trading at in terms of crude oil futures? I think we're at $85 right now. When the CPI came out, that was taking into account the numbers of sub $70 crude. Well, now we're back over $85. So if I had to speculate, I think the next couple CPI reports are going to be significantly higher because crude oil is going higher. That means we're going to start to see prices at the pump going up. But in this report, we had shelter costs continue to go up, and we also had food costs continue to go up. So if you do the math and you run the numbers on the report, shelter costs and food costs offset totally the decline and the savings in energy prices. Kind of interesting. Now, guys, check this out. We are now overlooking the brand new JP Morgan Chase office tower. The exact address is 270 Park Avenue, and this is going to be Jamie Dimon's brand new fortress right here on Park Avenue. Now, here's the crazy thing, and I've said this many times before. JP Morgan now has more total employees working in the state of Texas than they have working in New York. And to me, that is so disheartening, that is so depressing, that is so horrible. So hopefully with this new mayor, he can start to bring people back into the city. He can be a little bit more business friendly, and we could bring JP Morgan Chase back to New York City. I don't know, what do you guys think? Tariq Khan says WTI is $82. Thank you so much for that. Hey, Sunshine After Rain is here, welcome. MBA Elias says if food is expensive, why are restaurants reporting 11-year increase in dining since last year? This may not last long, says MBA Elias. Well, I think, in my view, I've been seeing and I was walking around the Upper West Side today. Now, this is anecdotal, right? Here's some more tulips on Park Avenue. But every single restaurant that I was walking past on the Upper West Side of Manhattan today was absolutely filled with people, slam packed. And I think this is still ramification of pent up consumer demand from COVID. People want to get out and spend money on experiences because they've been locked in their homes for the past 2 years. Now, I don't think we could use that excuse for long. But I also, I try to almost contradict myself in my arguments. Real quick, this is One Vanderbilt. Check out how cool this shot is of One Vanderbilt. That is awesome. Looks like Gotham City, like out of a Batman movie. Now, here's my contradiction. Does anybody want to hear the contradiction? And this is, I think MBA Elias would appreciate that. My anecdotes, and this is why I like to ask the audience, because we have people from all over the United States and all over the world watching here. So I'll ask the question first, and then I'll give my explanation. When you guys, wherever you are, whatever state you're in, whatever country you're in, when you drive past your restaurants, when you drive past, the bars, in your cities, in your states, are things crowded or are things dead? Because with me, if you think about a city like New York and you think about a city like Miami, there's a certain type of person that tends to frequent these cities, right? And this is just the fact. It tends to be people who are, especially when we're talking about Manhattan, Midtown Manhattan, the Upper West Side, Upper East Side, there tends to be more affluent people that have money, that have really good jobs, really good careers. So I think those statistics could be a little bit skewed towards how well the wealthy are doing. And this goes back to our conversation earlier in the live stream when we were talking about LVMH Moet Hennessy. We were talking about some of the luxury hotels like Hyatt. They're doing fantastic. So it could be that the top 10% of Americans are doing great, better than ever before, and everybody else is just kind of struggling. I don't know. I think that's a good point. And that's actually something we've been talking about, the two-tier society potentially. MBA Elias is crowded in certain areas of the city for sure. Diane is here, says Tom, Buffalo, New York, restaurants are booming. Wow, Buffalo's another major city in New York. I think the top 3 cities in New York State are obviously New York, maybe Syracuse, Buffalo, and Rochester. But it's good to know things are doing well in Buffalo. I actually wouldn't have expected that, honestly. Steph UH says, Tom, they are crowded here where I am. I'm in Central Florida. Okay, so we're actually getting a pretty good diversity in answer here. Hey, Long Island Duck 52, good to see you. Dominic Romano says things are packed where I am. Good to see you, Dominic. Thanks so much for joining. Stephanie says it's crowded mostly on the weekends, especially in Manhattan and Queens, says Stephanie. That's a good point that Stephanie makes. I want to touch on that for a second. Notice how Stephanie said mostly on the weekends in Manhattan. So real quick, I don't want to spend too much time on this, but this is actually a good piece of data. The reason why I say that is because the MTA has actually had to come out and adjust train schedules to meet changing demand. So what do I mean about changing demand? Well, I'll tell you what I mean. due to remote work and due to hybrid work, hey, Estelle is here. What's up, Estelle? Good to see you. Due to hybrid work and remote work, the trains are actually more packed on the weekends as opposed to major rush hour during the weekdays. It's actually kind of funny. So what you're seeing is people are choosing to work remote, choosing to move out to New Jersey, move out to Long Island, move to upstate New York, and only come into the city to have a good time, to go out to eat, to do shopping on the weekends, to sort of make like a mini weekend vacation. So as opposed to, Monday morning, you have millions of people flooding Midtown Manhattan, all the way through Friday, you're actually seeing people start to change the way they commute and the way the transit systems operate. Now, to play the other side of the coin there, we'll take a quick walk past the Yale Club. To play the other side of the coin there, I believe there was an announcement from JP Morgan Chase, speaking of JP Morgan, where they're announcing that all managing directors, so managing director is essentially, if you're not familiar with the hierarchy of an investment bank, the MDs will essentially lead a team. So the goal, if you're in investment banking, is to get to the position of managing director, right? And then under them, you have your VPs, then you have your associates, and then you have your analysts, right? So if you start off in a career on Wall Street, you're probably going to start off as an analyst, and then you're going to move to associate, VP, and then if you're lucky, the very coveted position of managing director, MD. Now, these are the people who are paid the most on Wall Street, who usually lead very large teams to do deals, and they are now required, I think Bloomberg broke this story last week, they are now required, if you're a managing director, to be in the office 5 days a week. Now, I don't know what you guys think, but I'll quickly tell you what I think as we look at the gorgeous Yale Club here at, I think this is 50 Vanderbilt Avenue, I think? Or 80. Yeah, 50 Vanderbilt Avenue here, Yale Club. If I was a managing director on Wall Street, which I'm not, and I was forced to come back to the office 5 days a week, do you think that I'm going to allow my analysts that are recent college graduates, 25 to 27 years old, to just work from home, work remotely while I have to haul my ass to the city 5 days a week? Not going to happen, okay? Not going to happen. So in my opinion, and again, this is my opinion, I may be wrong, okay? I may be wrong, but I think this is going to start a trend, a chain reaction across Wall Street to say, look, if I'm a managing director and I have to be in this chair 5 days a week, then every single one of my analysts, every single one of my associates are also going to come to the office right alongside with me. So, this piece of news, although it is small, it could set off a major chain reaction across multiple industries too. If you think about management consulting, the KPMGs, the EYs of the world, this could set the precedent that everybody's coming back to the office, which could almost inadvertently solve the problem we have here in New York with a lot of this commercial real estate sitting totally empty for the majority of the time. I don't know, I think I'll go back to you guys now in the chat and ask you, because I'm assuming you guys, we have a very diverse audience here. Many of you do work on Wall Street. Many of you work in tech. Many of you work, in other industries like, the trades. Some of you guys are HVAC mechanics, electricians, nurses, doctors, lawyers. What are you hearing from your higher-ups, right? Is it still totally remote? Is it hybrid? Or is there a major push within your org to get back to the office? Let us know in the chats. I would be very interested to know. Hey, the Don Father says, I worked on Wall Street in the mailrooms. That was my first job and I loved it. Wow, that is cool, man. There's so many amazing stories about how people have gotten their start just by starting at the very bottom and being very gritty and ambitious. Something like working in the mailrooms and working your way up. This is the main entrance to One Vanderbilt, and if you could see in the reflection here, this is actually the reflection of one of my favorite buildings in New York City, the Chrysler Building. Hey, Evan Weeks, says Tom, most tech jobs could be done anywhere in the world with a good cell signal and internet connection. I agree with that wholeheartedly, my friend. And it's a very good point too. Sabrina Fair says, Tom, 50% remote, something like this. Buy the book, says some are remote. Sometimes RMX Indiana says, Tom, we're all required to show up at my place of employment. Okay, so you're fully in the office now. Interesting. MBA Elias says, employers are offering work from home as a hiring perk. I've been seeing that, but I've also been seeing that a lot less. And, you know, MBA Elias, let me ask you this question. I was going to ask the audience, but I guess I'll ask you directly in the audience. I think we're getting jobs numbers, or not the jobs numbers, I think we're getting jobless claims out later this week, are we not? I think, don't quote me on that, but I think we're going to get jobless claims out this week. And they've been coming in hot over the past couple months, over the past couple weeks. And that's sort of how the business cycle works. And not to go on a big long tangent here as we're standing outside of Grand Central Terminal, but we're starting to see margin compression across many businesses. Now, Tesla is reporting earnings, on Wednesday, and I think the biggest story as Tesla reports is not how many vehicles they delivered, is not the progress on their new factory in China. It's going to be margin compression, okay? So, not to sort of deviate too off the topic here, but as companies start to lose profitability and as margins start to compress, employees start to lose their negotiating power of, staying home, maybe getting Fridays off. Because here's my take on it. If you're a corporation and you're starting to lose money, your earnings are starting to decelerate and decline, and your margins are starting to compress, well, your shareholders are going to start getting pissed off. Okay, that's the reality. That's their mindset. They're going to start getting upset, and from there, you look to cut costs. What's one of the easiest ways an organization can cut costs? It's by laying people off. Unfortunately, but that's just being real, it's cutting costs. And as we've talked about before, and I think this was Evan Weeks put in the chat, he made a really good point. He said over the course of the last 2 years, when money was extremely easy and extremely cheap, you're talking about, artificially suppressed rates, the Federal Reserve continuously expanding that balance sheet, buying mortgage-backed securities, U.S. Treasuries, providing liquidity into the market. A lot of these companies were making money hand over fist, and that unfortunately translates to what you call corporate bloat. So in corporate bloat, hey, Jackie Ward, thank you so much for your very kind $3 donation. Thank you so much, and God bless you. Unfortunately, corporate bloat really mainly happens in middle management. Now, that's not a shot at middle management. I've worked in corporate America all my life. I'm not trying to be mean or anything, but we've all worked under managers and middle managers, and it's just like a big dog and pony show, for lack of a better term. But when things are good, when money's cheap, revenues increase, profitability generally increases, and you have to hire more employees. And the hiring process, sometimes during big boom cycles, you can get a lot of duplicity. So you'll have, 2 people doing the same job, and if you really refine it, right, and I think who really set the precedent with this and who really set the trend with this is actually Elon Musk. He went into Twitter, fleeced about 70% of the employees, and, Twitter, I'm not saying it's running exactly the same, but it's still running with 70% less people. So what do you think Tim Cook is saying? What do you think Mark Zuckerberg is thinking and saying to his C-suite? Well, they're saying, wait, Elon Musk fired 70% of all the people that worked at the company, and the company is still running. Now, we could debate all day if the company is running better, if the company is running worse. It's not the point. The point is that the company is running. I use Twitter all the time, and it works the same for me. I would have never noticed that there's 70% less people. So the point is, Zuckerberg at Meta is going to start saying the same thing. Where can we reduce a lot of these big salaries? Can we start to lay off some of the PMs at Meta? Can we start to lay off some of the software engineers? And I think it's going to happen not only at these big tech companies, but it's probably going to bleed over into manufacturing. It's probably going to maybe, I shouldn't say that. I was about to say hospitality. But if anything, I think hospitality will actually, ironically enough, be maybe a little bit insulated from this incident. Who knows? So I don't know. Do you guys think that the tide is sort of turning here, where the employees are losing a little bit of that negotiating power? I think they are. I think employees are losing that precious negotiating power that they've had all throughout the pandemic. And I think, unfortunately, depending on which side of the aisle you're on, it's going back to the employers. Hey, Love is Kind says, yeah, didn't Mark follow suit and laid a bunch of people off? And now he's charging a monthly fee for Twitter. Yeah, I think it's like $8. I think it's called Twitter Blue. Hey, Edward Adams says, in 2020, my second manager in command said all clerical staff are to be in the office 5 days. Wow, starting after Labor Day. The managers, however, can stay remote. Wow, that's crazy. To me, and I'm not trying to talk bad about your boss, but that's poor leadership. If you're in a leadership role and you say, okay, everybody else has to come into the office 5 days a week, well, I can kick back in my office, that is a very poor leader. All right, let me catch up on some of the chats here. I apologize. Again, I have my briefcase tonight, so. NBA Elias says, Tom, jobless claims came out last week and we're up to 239K. Highest number in a year. Wall Street liked the number, says NBA Elias. Evan Weeks says, unfortunately, when it comes to corporate bloat, it always seems to be middle management for some reason, at least overwhelmingly in my experience. That's been my experience too. Real quick, guys, I totally went the other way. Tonight, I want to take you guys back down to the, hold on, let me cross here. I want to take you guys back down to the East Side Access Project. We haven't been there in a while, and I got to stay uptown tonight because I got to do some stuff at the office. But anyway, if you guys are enjoying the live stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams about 7 days a week. We try to, right? Unless that there's like a major rainstorm or I'm with the client. But we walk around New York City and Miami, talk about the financial markets, and also talk about pretty much anything. A lot of the interesting real estate here, the development of the city. And I think it's a good time. I'm having a lot of fun doing it too. All right, this is Pershing Square. Every time I walk past Pershing Square, I think of Bill Ackman. Now, speaking of Twitter, Bill Ackman has been very active on Twitter as of late, and I think we found our answer. Was anybody, well, maybe you were. Was anybody on that Twitter Spaces about 2 weeks ago with Bill Ackman and Elon Musk? Well, it turns out that Bill Ackman, I think it may have been through his personal funds or it may have been through Pershing Square, I'm not sure, participated in the deal to take Twitter private. I didn't know that up until a couple days ago. I don't think it's like an earth shaker position, but he's definitely in on the deal for sure. Hey, Melissa 2087, what's up? This is Tom. Went to New York City on Thursday to go to a concert at the Town Hall concert venue on 43rd Street for the first time. It's a super nice venue. Love that. Glad you had a good time. I'm trying to think of where that is. We must have walked past it, right? A ton of times. We had to have. Trying to conceptualize where that is. All right, real quick, check this view out. Grand Central Terminal, the MetLife building. Boom, look at that. That's probably the best shot of the Chrysler building we've gotten in a while on the stream. One of my favorite Art Deco style buildings in the city. All right, let's see what else I think we got to cover Thursday and Friday, and I think we're good. Obviously, Tuesday we talked about, we are now in the thick of earnings season, so that means all of the major financials will be reporting. So we're going to hear from Bank of America, we're going to hear from Goldman Sachs. Now, I always mention this whenever banks report, especially a lot of the major credit card issuers. The major thing that I like to look for, usually this earnings season, I'm actually going to look for something different, mainly due to the Silicon Valley Bank collapsing. But we can use a lot of credit card data as a proxy for consumer habits, consumer spending, and maybe even consumer sentiment. So if you think about a company like JPMorgan Chase, who reported last week, real quick, I want to show you guys just the gorgeous chandeliers inside Grand Central Terminal and all of the crown molding, absolutely gorgeous. But if you think of a company like JPMorgan Chase, obviously, who reported last week, this week we have Bank of America and the like, these are major credit card issuers in the United States. So a lot of times what traders will do, some event-driven traders, will try to use the financials and what they say about credit card spending, debit card spending, and even delinquencies. I think we should watch a lot of the delinquency rates. So oftentimes they'll report a 30, 60, and 90-day delinquency rate as it relates to credit cards. And last earnings season, Brian Moynihan, which is the CEO of Bank of America, came on the call and said that we're still seeing delinquency rates below pre-pandemic. Now that's good news, but the bad news is you're just starting to see those delinquency rates creep up a little bit. So is this a lagging effect? Are people starting to carry incredible balances on their credit cards and now they're only making the minimum payments? I think we may be able to say that. And here's why. I think it was 2 weeks ago now, it may have been 3 weeks ago, time is flying by so fast. We did get some data that consumer debt in America, in the United States, hit a brand new, fresh all-time record high, and credit card spending is up yet again. So you're seeing consumer debt balloon, you're seeing credit card spending balloon, and Wall Street, it's sort of a little bit bifurcated here. Oh, we're going the wrong way. We got to go down here to get to Long Island Railroad. A lot of people say, oh, well, if the consumer is spending, that means the consumer is strong. Everything's going great. But on the other hand, maybe a little bit of a contrarian thinking is to say, well, maybe not everything is going so good. There may be a reason why credit card debt and credit card spending is ballooning. Maybe it's because more and more Americans are turning to spending on their credit cards just to make ends meet, right? So in theory, and I know this is very basic and everybody pretty much knows this, but you want to use a credit card for purchases and then pay off the entire balance at the end of the month. But many people, right, and that's okay if you do, but you should really try not to, but many people carry a balance and only pay the minimum payment, right? And this is how many people in America live to sustain themselves and the like. But the problem is, when you only pay the minimum balance, let me open the door here. We are now going to the brand new East Side Access project at Grand Central Terminal. I always love coming down here to show you guys. I know I've showed you multiple times, but we do have a lot of new people. The problem is when you only pay the minimums, if you look at consumer debt, it's the highest yielding debt, unfortunately. So some credit cards, the interest on there could be like 20% plus, which is a big issue. So if you've ever looked at a statement, it'll actually break down for you. If you pay this off over a certain amount of time, this is the amount of interest you would wind up paying, and it's really astronomical. It could be double, if not triple, the amount of the actual balance. So you really want to make sure you're paying those off. So as we're getting a lot of this news out, look at this. It's like a mini fire EMS thing. That's cool. So as we're getting a lot of this news out, sorry to get sidetracked, that many Americans are now relying on their credit cards solely, and if they're carrying a balance, that's no good. That means banks over the long term are going to make more money in gathering interest payments, and more Americans will be cast into debt, which is not good. Hey, Hawaii, what's up? Says, yes, I use credit cards and pay it all off at the end of the month.
Now it's 10:13. Please stand clear for closing doors on track.
Man, it's quiet down here. It's like eerily quiet. So we are now looking down the hallway of the East Side Access Project. So now a lot of Long Islanders will be able to come into 42nd Street as opposed to 34th Street, Penn Station. Brian is here. Good to see you. Richard Vogel. Ed T says that's not good, paying just the minimum. Yeah, I agree. Now, does anybody know, because I didn't have enough time, been dealing with a lot of crazy stuff, but good stuff. Was anybody able to see the details of JP Morgan Chase's earnings report as it relates to credit card spending, consumer spending, and delinquency? Because usually they have that on the investor deck. I just didn't have enough time to look at it. Hey, Steph UH. Says we opened the new card account with 0 interest for 2 years. Wow, that's good. Transfer balance and paid it off. Very, very good. It's a good hack. I didn't even know they offered that. I didn't even know some people offered that. That's awesome. Hey, Edward O. Good to see you. Welcome. So guys, these are the infamous escalators that take like 2 minutes to go down. Truth Teller, welcome. Yeah, Hawaii, this is Tom. It's happy to have you back. I'm happy to be back. It's definitely been missing a lot. So check out these escalators. This is the New York insignia here. Hey, Michael's here. This is Tom. What's up from Corpus Christi, Texas? Good to see you. This is how was Boston? Yeah, Boston was good. Boston was good. I was only there for like less than 24 hours. So I flew in Saturday morning. I flew out Saturday night. But Boston was a pretty cool city. I'd never been there before. I flew into, what is it called? Logan Airport. Really nice airport, by the way. Now, here's the thing. So I had to go to a big event, and I almost missed my flight back. So I was rushing to the airport. I was going like a mad dog. I was going crazy to the airport. I was even harassing the Uber driver. I felt really bad, so I tipped him like crazy. I was like, you got to get me on this flight. And when I get there, the flight's delayed like an hour. So I'm like, oh my God, I have an hour to blow in the airport. And I'm like, you know what? I never eat at the restaurants at the airports, ever. I never do. But there was this steakhouse, and I think it's like a famous steakhouse in Boston. I forget the name of it. I'm horrible with names, but it's one of the famous steakhouses in Boston. And I went there, and it was absolutely fantastic. Like, it was really, really good. The steakhouse there in the JetBlue terminal. 2 thumbs up. Very, very good. Hey, Robert Parker says, hey, Tom, you're taking the train via Grand Central Station now. You know, I do. It's a little bit more convenient for me, especially now that I'm spending the majority of my time working on 57th Street, so instead of going to 34th Street, this will get me at least half of the way there. But let me take you guys down to the tracks. This is the brand new, once again, just opened this year, Long Island Railroad Concourse. And let me tell you, it is hot down here today for whatever reason. They don't have any AC. Hey, Dan Zhang says, hey Tom, is the coming week hold on, earnings week for regional banks? I think some of them are reporting. Mostly all the financials will be reporting this week. Now, tomorrow, obviously, is Charles Schwab. Then we have M&T Bank. Tuesday, we have Bank of America, BNY Mellon, Goldman Sachs. I think also Morgan Stanley is going to report on Wednesday. But yeah, I think this earnings season, everybody is going to be hyper-focused on the financials, right? What are the ramifications? And I wish I was able to make JP Morgan Chase's earnings call, but I wasn't. But a lot of these analysts, and rightfully so, are going to be hammering the C-suite of all of these banks with questions, right? Now, here's the main question that I think we're going to see at the regional level. This is the Long Island Railroad trains that I get on, by the way. I'll take you guys inside of one. Hopefully the doors don't close while we're here. But this is what I ride home on every night. This is it. This is the Long Island Railroad. So just imagine this is where Tom walks from Wall Street, goes home. Really nice. I like the Long Island Railroad. It's very clean in the cars. It's very nice. I enjoy my trip. It's like 45 minutes home, and I get a lot of work done. So I like it. I like the Long Island Railroad a lot. But here's the main question. I think a lot of analysts on the street are going to be asking specifically the CEOs of regional banks just how bad the outflows have been into the larger banks. Because here's the theory, and I think Dan Zhang in the chat made this point multiple times. It's many consumers right now, or many people that bank, are very concerned that why should I leave my money in a regional bank, in a local bank, when I could just throw all of my money in a big bank, right? So the big four, you could think about JP Morgan Chase, Bank of America, Wells Fargo, and Citi. So the theory there is, why would I ever take risk and open up an account with a regional bank, with a smaller bank, or in Silicon Valley Bank's case, the 19th largest bank in the United States, because if JP Morgan Chase goes under, that's it for America. It's all over, right? So the terminology we use there is it's too big to fail. So I think this is a big risk because unfortunately what I think is going to happen, which I don't want to happen, but unfortunately I think this is going to happen, you're going to start to see an acceleration of the decline of a lot of smaller banks, and you're going to see massive consolidation into a lot of the bigger banks, right? And you've seen this abroad too, right? Think about in Switzerland now. There's really only one player. UBS acquired Credit Suisse. Credit Suisse used to trade under the ticker symbol CS. They had to have UBS come in there and take them out, pretty much bail them out. And I think you're going to start to see this in the United States too, right? We started to talk about the cockroach theory. If you see one cockroach, chances are there's not only just one. There's usually hundreds. So I wouldn't be surprised over the next, 10 years, you really only have like 10 big players, unfortunately. So man, it is literally probably 90 degrees down here. Hey, Ethan G says, Tom, do you play chess? I do. I do play chess. And I would highly recommend people learn the game and play the game. Very good game. All right, let me read some of the comments here. Hey, NBA Alliance says, how will regional banks handle the coming commercial real estate question? That would be my question. That's also another big risk, huge risk. Now, I think for individuals and other well-capitalized firms, I think there's going to be unprecedented opportunities. Man, it is roasting down here. It feels like they have ovens just going on. I think the AC broke and I have my jacket on, but yeah, I think what's going to happen, right, if you look at commercial real estate, specifically office in big cities like San Francisco and New York, it's going to be a big problem. I think it's going to be a bigger problem in San Francisco. I think it will still be a big problem in New York, probably to a lesser extent. But where I also see a big risk is on the multifamily side of the house. So what do I mean by this? Well, if you look at a lot of these deals, and I was watching this one particular deal out of Texas 2 weeks ago. I think it's been 2 weeks ago now. And I posted this on my Twitter, by the way. There was about $250 million worth of real estate in this particular deal that foreclosed. And what I'm seeing is a lot of big players out there, when interest rates were very cheap, right? When money was really cheap, interest rates were low. They did a lot of these deals financed on floating rate debt, right? Or adjustables. And the problem is, here's the thing. A lot of these banks, a lot of these financial institutions, their profit motive is a little bit different. And here's what I mean. They really only care about doing the deal. I shouldn't say only care, but a lot of them just care about doing the deal, doing the transaction, and then everybody gets a big payday, right? Especially the brokers. So if you just do these deals in volume, well, the people who are employees at these places make a lot of money. Unfortunately, the shareholders can lose their shirts. And I think that's what's going to happen, because this debt is going to adjust at much, much higher rates. You're already starting to see this. I posted a couple of deals on Twitter that are already going under. And a lot of these portfolio managers are saying, okay, no problem. If the rates adjust up, we'll just raise the rents. Problem is, there's no way you're going to be able to raise the rents high enough to cover that debt. People are not going to renew their rents. I think there was a statistic here in New York that the median monthly rent for a Manhattan apartment in the month of March is $4,175. Consumers are tapped, okay? And they're not going to be able to absorb the rental increases. So the point I'm trying to make is, as this debt adjusts to higher interest rates, those monthly payments are going to go up significantly. And it is in my view, and we could have a whole stream about this, it is in my view that a lot of those deals are going to go south in a big way. And those deals are going to go back to the banks, and institutions and individuals that are well capitalized are going to be able to get really good deals on some really, really good properties over the next 12 to 24 months. So we'll see. And I think this could also be good for people, right? Because rents are probably going to go down. And that's not a popular opinion right now. A lot of people think rents are still going to go up. I actually don't think so. All right, let's exit Grand Central Terminal. Feels like a hot box in here. Hey, Ed Dunkel, good to see you. What's up, Ed? Oh my gosh. I think the AC's broke. in Grand Central. David Pershing says median is but a single number in dead center middle, middle of all numbers. Model number is better. Hey, somebody says, hey, watching live from India. Love that. All right, guys, give me 2 seconds. I actually got to take off the jacket. It is that hot in there, and I never get hot. Hold on. Okay, we are good to go, team. Ready to go. So I think we pretty much beat earnings like a dead horse. We covered the lion's share of what's going to go on this week. Now, I want to draw everybody's attention to Thursday. Now, Thursday is 4/20. It's April 20th. So there's going to be a lot of marijuana being smoked in the city of New York, but I got to have you guys hold back a little bit on the dope smoking on 4/20 because we need to be locked in. We need to be focused because the National Association of Realtors are reporting existing home sales for the month of March. And this is a pretty big deal. Every single month, we pretty much do an entire live stream dedicated to the existing home sales report because it's going to give us a pretty good idea of what markets are holding up better than others. Now, if you remember from last month, existing home sales actually went up on a year-over-year basis. So if you look at the February numbers, I think existing home sales are up about 14.5%, and the specific markets where they were up the most was the South, the Midwest, and even the Northeast. Now, the only, I should say, subsegment of the market that existing home sales declined was in the West, right? Places like California, the Pacific Northwest, and the like. That's been a real laggard. And many people, including myself, I think you're going to see the Northeast have a huge selling season for deals in the spring and in the summer. I think the Northeast is going to rebound in a big way. Now, many of you may say, am I being a little bit biased because I'm from New York? Maybe. But I could tell you this, especially as it relates to New York City specifically. I think New York in and of itself is very unique. And no matter how crazy the politics get, right, no matter how, I should say the perception, no matter how bad it may get, no matter how high the taxes go, people are always going to want to live here, including me. It's just such a unique city that is so famous, not only in the United States, but all over the world. I mean, you should see some of the emails I get, just anecdotally. People, email me saying, I want to visit New York. I'm trying to save up all my money just to try to travel to New York one time, right? So it's such a desirable place. It has such a brand that I think other cities like, unfortunately, San Francisco, just doesn't have, right? Yeah, San Francisco is huge and it's big in the tech industry and the tech scene, but it doesn't have that iconic staple of New York City, right? It's just not the same. So I think it's going to take a little bit longer for real estate values to recover in places like San Francisco and major cities on the West Coast. And I think you're going to see outperformance in cities on the East Coast, specifically New York. Now, I ran a poll on Twitter, real quick. I ran an interesting poll on my Twitter profile. And I said, over the next 5 years, right, so we're talking about a 5-year time frame. I said, which city do you think, in terms of residential real estate, is going to propose the biggest returns. And I listed the following choices. I said New York City, Miami, Florida, San Francisco, and I think I may have said Austin, Texas. I forget. You could look at it on my Twitter page at Walks Wall Street. Now, the vast majority of people actually said Miami. Oh, GGNYC says I went for Miami. My answer may surprise you guys because you know I own property in Miami. I actually don't think it's going to be Miami, Florida. I think it's going to be New York City. And again, notice the time horizon. I said 5 years. Because Miami has been a market, and Southern Florida specifically has been just on fire. And I think a lot of that fire is going to fizzle out. Now, that doesn't mean I'm bearish on Southern Florida and Miami. Quite the opposite. But in no point throughout history has prices just gone up, and never have at least cooled off or went down, at least even a little bit. So if anything, I think that there's more opportunity for returns in a city like New York, at least over the next 5 years, than a city in Miami. I think a lot of people already made the money, and the recovery is alive and well. I mean, it's not even really a recovery in Southern Florida. It's just like a boom town. But cities like New York have been a little bit slower out of the gate because of, the increased COVID restrictions, the remote work. But a couple of points that we went over today, guys and girls, big news out of Wall Street. I think this is coming directly from JP Morgan. They're requiring all of their managing directors, all the MDs, to come back into the office 5 days a week. Now, chances are if JP Morgan is doing that when they are the biggest, most impressive, most profitable bank on the street, if they're doing that, I could almost guarantee every other bank is going to adopt that model. Now, you also have Mayor Eric Adams, right, the mayor of New York City, literally going and having meetings with some of the most powerful banks on Wall Street and telling them, hey, you guys got to bring your employees back to the office because we're having a slow recovery here in New York, especially a lot of the mom and pop shops in Midtown that aren't getting that traffic that they usually got during rush hour. So I think my thesis for New York specifically is that it has that iconic brand, but it also has the tailwinds of a lot of these major corporations bringing their employees back to the office, bringing their employees back to work, right? I wouldn't be surprised, I'll make a little bit of a prediction here as we head back up Fifth Avenue. I wouldn't be surprised if we start to see over the next coming weeks major consulting firms and other major investment banks and even boutique banks and even some tech companies in New York requiring their employees to return back to the office. And I think that's going to help real estate prices rebound here in a pretty big way. Wax's brokerage employees can afford the $4,000 a month rent. Richard Vogel, good to see you. All right, let's cross here. Yeah, we'll cross, because I got to go back to 57th Street. Might as well take you guys with me. Hey, Tom AK, thank you for joining us tonight. We appreciate it. Hold on, let me, just gotta fix my bag. Hey, Krog Dogs, our colleagues in Seattle at S&P Global are subletting the floors of their offices. Wow. And letting the employees work from home. We saw that a lot. I think Facebook did that with some of their office space in New York City. I didn't know S&P Global was doing that. Wow. All right, but team, I think we covered a lot tonight. We had very good conversations. Just to quickly recap it, because we're coming up on the 2-hour mark and I got to get back to the office. I just really quickly want to say, I do suggest everybody go read the cover story of Investors Business Daily this week. It talked about China specifically. It talked about the trade war. But the entire article, I should say the majority of the article, as we are here at Rockefeller Center, was about the innovation race in technology, specifically semiconductors and the like. But it also talked about a lot of the rare earths that China is mining that go into all of these products that we use every day, specifically EV batteries for the vehicles, for semiconductors, for chips. So the conversation we had today is that, we see all this talk in the media about how the US is going to go to war with China, China is going to go to war with the United States. But if you really think about it and use the phrase that I like to call follow the money, we need each other more than many people think, right? If China doesn't have access to all of our software to design and develop these chips, they're not going to get made. But on the other hand, these chips also won't get made if China puts a restriction on the exporting of a lot of these rare earths and raw materials. So I think it's one hand washes the other. Definitely take some time out before you go to work on Monday morning. Read that article and start to really pay attention. We talked about the Federal Reserve. We talked about interest rates. Had a deep conversation there. We talked about the potential or the rumor on Wall Street and on Main Street that the dollar is going to decline and lose its status as the world's reserve currency. I do not think that's going to happen. We talked about France specifically as it relates to, them cozying up to China. But the reason why I think they're doing that is because, you think about big companies like LVMH, Moet Hennessy. It's very, very dependent on big Chinese spending, right? You think about the official end to the zero COVID policy. That is spurring a ton of demand and a ton of buying activity and consumer spending with the most successful French companies on earth, like LVMH. Look at this. So they've removed the ice skating rink, and now they've put in sort of like a roller rink. This is going to be cool to see this play out over the next couple live streams. We'll have to come back here. But the name of the game this week, everybody, is bank earnings. Tomorrow, Charles Schwab. Then we're going to hear from the National Association of Home Builders. And later in the week, we are going to hear from the National Association of Realtors for existing home sales. We are going to be covering all of that and more this week on Walks on Wall Street. So if you're new here, please feel free to subscribe to the channel. Leave a like on the video if you enjoyed the live stream. And I'm wishing you guys a very healthy, happy, and prosperous, successful, rip your face off week starting in a couple hours here on Monday. So if you guys want to join us tomorrow, we'll be live at 8:30 p.m. live from Midtown Manhattan. We'll talk about Charles Schwab's earnings report. But until then, I'll see you guys later. So Line Sync, thank you for joining. Richard Vogel, thanks so much. Cindy Foley, The Meek, Sunshine After Rain, Jenny Trickett. It's good to be back. Thanks for joining. Wendy England, Bree Grams, Tom Barry, Tom AK. Photos from around New York. Dusty Cole, Brick Stonewall, DM, Karina Thompson, thank you so much. UniJ22, Joe Hernandez, Austin City Limits. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere and you just need to know where to look. If you want to connect with us off YouTube, you can follow us on Twitter at Walks Wall Street and subscribe to our free investing newsletter in the link in the description below. Have a great rest of the weekend, everybody, and a very prosperous week ahead on Monday.